This is Jeff Tamburello, Director of the Southwest Florida REIA, here to talk about real-world real estate investing. Are you an investor or are you a trader? Disclosure, we are sharing our experiences and knowledge with you. Please do your own due diligence before utilizing anything here. This is not to be construed as investment advice. You should seek competent counsel before trying this at home. One of the very first questions whenever I'm evaluating a deal I ask myself is this a trade or is this an investment? And it's really critical because each one has its own rules, its own guidelines, and its own underwriting process as well. Investing is really your buy and hold investor. You put a sum of money in place and you expect to get some sort of a return. Trading, wholesaler, that's assigning contracts. If you're trying to assign contracts, you really should look into the legalities of Statute 475, and particularly there's some precedents of whether you're on title or not and what constitutes a valid interest. It's something that if you're not aware of, you definitely should. We have had a couple meetings about this to include somebody from the state of Florida. So be cognizant because you can get yourself in trouble if you don't know what you're doing and don't structure your deals right. And then there's rehab and resale, which is flipping the property, or you can just resale. I have actually bought properties at the steps and then sold them to investors who bought with hard money because for some reason they didn't buy at the steps. If you're going to buy and hold investing, the first question is how much capital are you employing? And the key is to be realistic with yourself. This is going to define the price point you're going to work in. Real estate investing allows large degrees of diversification. Smart money does not put their eggs in one basket. Here's a real world example. Most of the funds I work with, they do not allow more than 10% of the fund to be invested in a single property. Buy and hold, you also need to understand price versus value. And everybody gets really excited when their property is worth more, but that also means the taxes and the insurance are going up, which technically puts the value down because the value is really based on the yield. So as the price goes up, the value goes down. And as the price goes down, the value goes up. So if the price actually goes down and the tax bill goes down, that actually increases your cash flow. The return on investment is key. Realistic rental rates, insurance costs, management fees if you're going to employ a manager. You got property tax, maintenance, repairs, and vacancy. Anybody who owns the rights of property with a 0% vacancy rate, you're kind of setting yourself up to fail. Refer to the APOD for cost analysis versus rate of return. That's a spreadsheet when you join the REIA, you'll get a copy of. Know the area you're investing in. Understand any upcoming zoning changes, any utility changes. Are they running water and sewer anytime soon? Crime rate. There's so many factors that you need to overlay on this type of an investment. Side note, return on investment comes in all shapes and sizes. This is a property that was bought for $35,000. It was rented at the time for $595 a month. It's now rented for $750. And at the time at $595 a month, it was throwing 12.780% a year cash on cash return. And that was, I believe, with a 20% vacancy factor in the APOD. And if you look at from this is the LIPA chart of the values, it kind of shows you what the pricing did in the last cycle. Now let's talk about trading real estate. The purpose of this is to clarify the difference between trading and investing. There's nothing wrong with trading real estate. We've all done it and we'll do it again today, but it's important to understand the difference between the two. Most effective wholesalers sell properties to investors with an adequate equity spread. 5% below market is not a deal. Disclose, disclose, disclose. Disclose everything you know, particularly if you are a licensee. Just an example of a good deal that most investor would look for. A good deal would be, say, 65% of market value that potentially with assignment or closing and then selling it with the additional cost, you were to get 75% of market value. There's still plenty of meat there for the next investor. Be sure to have your attorney review and revise your contracts. Make sure you disclose you are a licensed real estate agent if you're doing business on your own accord. Make sure you have some comparables to support your real market value and ensure you're using legal contracts and marketing materials. Be particularly mindful of both contractual law and Florida Statute 475 for the exemptions of not being licensed. As well, there is a presumption that the state of Florida uses a DBPR that you need to be cognizant of as well. For rehab and resale, you need to be well funded to flip the property when doing full rehabs. You need to be thorough when estimating rehab costs. In recent transactions, we've had licensed contractors do the estimating. They toured the assets with us. Their estimates were part of our underwriting. With that said, you need to add a percentage to those estimates because there's always changes. When they tear the wall out, they really find out everything that's wrong behind it is a good example. You also need to understand the market you're flipping into. This is kind of a key point. You don't put a $5 light in a $500,000 house, and you don't put a $400 light in a $50,000 house. Well, you can, and it will help you sell it, but it's not cost effective. You want to make sure you rehab the property to your comparable market standards or better. Again, you don't want $10 work in a $100 house. Understand your exit and resale price point. There are certain points that the banks are resistant to lend in, the lower and the upper. In investor-driven markets, investors make the most sense for your exit strategy. Then you need to underwrite this asset with the APOD. If you have questions, there's two of us that run the RIA. You can always give Mike a call at 239-560-6164. There's his email address, or you can give me a call. My number is 239-671-8248. We'd be happy to, if you want to run some stuff by us. If you got a deal, we'd love to talk to you about whatever deal you got too. If you have any questions, you can always shoot me an email, jeff.southwestfloridaria@gmail.com. Thanks for watching, and make it a great day.